George Magnus is Senior Economic Advisor to UBS Investment Bank. Pleased to say joins me in the studio now. So, George, let me start by asking you then if a treaty of 27 would have been more convincing and perhaps even more plausible to the markets, given the reaction that we've seen this morning.
Well, it would have been, I think, especially since there would have been much greater certainty if they had kind of codified a lot of the changes which were on the table. I think that would have been necessary for the point of view of credibility. I still don't subscribe to what it is that they're trying to do, but I think to be consistent, I think they should, which it would have been better had it been embodied in treaty change.
And that's precisely what we didn't get, as you say, we got an intergovernmental agreement. So I'm just wondering then, from what you've been seeing, or at least from your analysis, how legally complex could it be?
Yeah, I think you're asking the wrong guy, actually. Just a mere economist rather than a lawyer.
Yeah.
I mean, from what I read and from what I understand, it's quite difficult. It is actually not possible, really, for the Eurozone or Eurozone plus countries to use European institutions and European provisions to basically address some of the issues that they're trying to address in terms of this fiscal compact. I mean, presumably lawyers will find some kind of way out for them to be able to kind of get around this. But what does that do for the credibility of what it is that they're trying to do? I mean, the whole idea about this kind of intergovernmental approach was that it was too lax, it was vulnerable to being abused and not really, to being overridden. So I don't really see that this is taking the Eurozone very far along this route to so-called fiscal union.
All right, but did you sense, at the very least, perhaps a greater sense of urgency on the part of policymakers, perhaps even a greater recognition that the stakes are rising? Oh, absolutely. They're very motivated and very concerned. The trouble is they've misdiagnosed the problem, and they're trying, therefore, to attack an issue with completely inappropriate policy tools. So what they're really trying to do is, in effect, is creating a kind of a pro-cyclical austerity zone, from Portugal to Greece and from Finland to Italy. And I don't really see how this has any relevance at all to dealing with the problem of the sovereign debt crisis and the banking crisis. But I suppose the one thing that we were hearing from Germany, that we have been hearing very consistently, is that Eurobond or Eurozone bond issuance is not a straightforward process, that we have to see sort of closer alignment when it comes to budgetary discipline and economic policy before you can actually issue those bonds.
Yeah, well, in the first place, I don't think these joint liability e-bonds could happen without changing the German constitution. In the second place, now that there isn't a kind of a treaty change to embody this, I can't even see how this could be at the end of the process. So I just think that's really not going to happen. It's just not on the agenda at all. And I think that's a critical weakness, actually, because the credibility of sovereign solvency in the Eurozone actually requires joint liability e-bonds as an endgame, even if it doesn't happen this year or next year. That we should have some kind of timetable or kind of plan to get there would be very, very important. But I think that's just not going to happen.
And to what extent are non-Euro countries then isolated? Because there are many analysts and commentators saying that British Prime Minister David Cameron made a fatal mistake, because now France and Germany can then turn around and say, particularly the French, that perhaps aren't in favour of this immediate sort of European federalism, if you like, were able to say, well, we couldn't go all the way because we had someone standing in the way.
That's a little bit disingenuous, actually. And actually, I think it's too early to say whether David Cameron is going to turn out to be a hillbilly or a hero. I mean, obviously, at the moment, the political class says that he's, apart from the Eurosceptics on the Conservative Party, say he's a hillbilly and he's actually ostracised England, Britain, and, terrible, catastrophic decision. But let's reserve judgment. I mean, a year from now, the Eurozone, its economic position will be worse than it is today. It'll be much more difficult to get decisions done intergovernmentally when the details of this actually begin to become clearer to citizens. And maybe for the wrong motives, but actually he may prove out to be, not so stupid for having left Britain out of this austerity zone. So.
Now, we already had a warning from S&P, didn't we, just before this Euro summit, some saying that it was a way of perhaps exerting pressure on European leaders, saying that the credit ratings of some of these AAA countries could be at risk. We now have Moody's coming out and saying, look, what we've seen from the summit isn't substantial enough to help the ratings in any way. Is this something to now be wary of? Is the risk of a AAA downgrade rising?
Oh, I think it's inevitable. I mean, it's just a question of when, S&P or the other rating agencies decide to pull the trigger. What this pact does is, I mean, it does a lot of things, but what it doesn't do is do anything to address the immediate crisis. It's maybe for the next crisis, if we should get that far. And we still need to find ways, I mean, to appease the rating agencies. You have to find, and investors, you have to find ways of actually improving the perspective of solvency in the sovereign space, and of course, of engineering something that actually gets people a little bit more comfortable with the idea of accepting Eurozone financial instruments. And I'm afraid this pact does nothing to do either of those.
Just a quick one, George. Is it then down to the ECB, more pressure on them to act now?
Well, in the financial services industry, we think so. We think, we're baying for the ECB to do all the things that it keeps telling us it can't do. Maybe if the crisis worsens materially, which I suspect it will, the ECB can be a little bit more flexible. But I don't think that Draghi will do the kinds of things of infinite and open-ended bond purchasing, which the industry actually thinks it should do.
All right. Well, George, you've been good enough to stick around with us, so we're going to get more from George Magnus on the Pulse. Going to get his thoughts specifically on China now. So just taking a look at that data that we had today, George, from China, essentially showing a shrinking trade surplus because of the European debt crisis. If we were to see this sort of data continue, what are the implications for monetary policy? Could we actually see China add more stimulus next year?
Oh, I think that's almost a slam dunk, as they say in the United States. And I think the reason is, I mean, it's already started really with the first kind of general reduction in reserve requirement ratios, which were announced quite recently, which actually followed a much more closeted and focused easing of credit conditions in particular towns and cities because of the weakening of the property market. So there will be more monetary easing, possibly some fiscal easing as well, yes.
And in terms of China's economic expansion, I mean, this is just one assessment, if you like, just one estimate, according to Mura, saying that it could decline to some 7.5% in next year, in the 3 months through to March, from 9.1% in the third quarter of this year. I mean, what does that mean? I suppose the assumption there is that export growth will continue to slow and that property prices will curb investment. Is that the way you see it?
Yes, absolutely. And in fact, of course, when China publishes its GDP statistics, they're always given to us in year-over-year terms. So if you then kind of try to disembowel these numbers a little bit and look at the sequential quarterly growth rates, I think what we're going to see in the first half of next year, that the momentum of growth actually will be even weaker than that. It may be down to around 6 or 6.5%. So that, I think, will flag red, and we will get a more substantial and more generic easing of policy.
So then what are the economic implications of that for everyone else, particularly in the developed world?
Well, we may cheer, to begin with, that somebody is actually easing monetary policy with a realistic prospect of being able to stimulate some growth. But actually, I'm not sure that it does China a huge amount of benefit or favour over the medium terms. Remember, the 12th five-year plan and the new leadership who are taking charge in 2012, I mean, have this important and vital rebalancing agenda. But most of the things they're going to do will be to sustain the imbalances in the economy. So this short term, it may be cheered, it may be welcomed. In the medium term, it's just going to add to the rebalancing challenge which China's leaders will have.
And of course there's been a great deal of speculation, or at least anticipation, you might say, around the prospect of China stepping in to play more of a role, whether it be through the International Monetary Fund in European rescue efforts. If we have a situation, as this data seems to suggest, where exports are slowing to places like Italy and Germany, might that prompt China to play a bigger role?
It should, right? I mean, China's a big creditor, and Europe is the biggest export market, and so they have a vested interest, economic interest, to ensure that that Europe doesn't kind of go down the plug hole. But there's been a lot of hype about Chinese participation in European rescue funds before. I suspect that if this proposal to get the European national central banks to contribute to the IMF goes through, there'll be some kind of quid pro quo. But actually, Chinese reserve managers are just as cautious as any others, and they say, why should we put our money where the Germans, refuse to put theirs? So
it's all about getting a plan in place.
It is all
first.
about getting an international rescue organised, yeah.
All right, George Magnus, thank you so much. Really good to get your thoughts, your analysis.